Ladies and gentlemen, welcome back to the channel. Yesterday was a rough day for markets, to say the least. The S&P was down 1%, the Nasdaq was down about 1.5%, even the RSP, which is the equal weight S&P, which has gotten utterly destroyed recently, really since December 1st, was down 0.6%. And the craziest thing happened yesterday, because nobody really knew why markets were falling. Like, it was a big day, and there wasn't a lot of kind of conclusiveness to draw from it. Now, some people say 10-year Treasury yields had a little bit to do with it, and yeah, to a certain degree, 10-year Treasury yields did go higher yesterday. I mean, they went from 4.57% up to about 4.61%, down to about 4.57% again, and then kind of climbed throughout the trading day thereafter, okay, to about 4.61%, and then did jump a little bit more in the last hour, essentially after hours for the bond market. But this has kind of been happening for a while now. This is not really something new that all of a sudden slapped markets in the face. There was some geopolitical tensions. South Korea basically got rid of their president. Okay, they impeached their president. I don't think that had anything to do with it either. And if you watched CNBC or Yahoo Finance or the Schwab Network today, nobody really knew what was causing markets to fall. There wasn't anything that definitively happened that was like, oh crap, that's not good. Now, at 5 p.m. yesterday, Janet Yellen said the Treasury expects to reach a new limit for debt issuance between January 14th and January 23rd, at which time it will be necessary for the Treasury to start taking extraordinary measures. We've dealt with this before. I don't think the markets were reacting to this. After all, this news came out after markets closed. But could this have possibly been what disrupted markets? Maybe. The easiest thing I can kind of say is maybe all of this affected markets today. And we're in this low volume period into the end of the year. And tactically speaking, there's still a lot of tax loss harvesting taking place. Now, 75% of investors, according to CNBC's recent survey, expect that big tech will underperform next year. A lot of the selling was concentrated in big tech, although it was kind of just bloody across the board. But Friday was a little bit different because big tech actually sold off. Now, with everyone expecting big tech's going to underperform and there's still being tax loss harvesting, you could make an argument that tax loss harvesting is affecting other sectors besides big tech. And then Wall Street's growing kind of negative on big tech, so that sold off as well. And boom, that's how you get a day like we had on Friday. But again, I come back to the same point here. We just don't know. And that's something that is very rare for markets. You normally do not see a day where the S&P is down 1%, Nasdaq was down 2% for a majority of the day on Friday, and you just don't know what happened. From that standpoint, okay, it's probably not going to last, or there's a bigger problem under the surface, and that could be the case. I've had some concerns now for January that once we really get into 2025, big tech is likely to be sold. If big tech is sold and the rest of the markets are not bought up, then you are vulnerable for a larger drawback in markets. Thus, you'd be potentially vulnerable for a larger drawback in Tesla. Although I can make a very strong bull case to you why next year is going to be really good for Tesla and why you want to own as much as possible. But from time to time, it doesn't matter. From time to time, the bull thesis gets thrown out the window and people become scared. They're scaredy cats, okay? That's just how it is sometimes. In my personal opinion, I think this is an opportunity to buy Tesla stock. Obviously, if you are a long-term investor and you're long-term oriented in Tesla, this is a great opportunity. And there's some people that even believe that this was kind of a fake out or the last kind of drop for this market in 2024. And maybe Monday and Tuesday are going to be, we're going to come back. The bulls are going to come back and things are just going to be fine. It's kind of like a bear trap, right? You get everyone that jumps on the bearish side and then, oh yeah, wait, nope, we go higher. Okay. That's kind of what some people said today. Honestly, I wish I knew certainly with definite answers here. But just the fact that we don't know why markets sold off yesterday, it's impossible for me to tell you. I know exactly what's going to happen next. I've been bullish on Tesla. I continue to be bullish on Tesla. I continue to be bullish on small caps, on value, and on cyclicals that have really done poorly in December. We expected this would happen, though. I was not bullish on these areas in December. Not once have I said small caps are going to do really well in December. I am on the record, though, saying Tesla and small caps and value and cyclicals will outperform big tech in 2025. That I feel confident in. Now, Monday and Tuesday of next week are the last trading days of 2024. I also feel fairly confident. It's a little bit more difficult after Tesla fell 5% on Friday, and there seems to be a lot more fear for no reason, but that we could see some shorts covering into year end for Tesla stock. Because, hey, if you're going to take a loss on your short position in Tesla, you probably want to do that in which to offset some of your capital gains liabilities, because this year has been a pretty good year for other areas, okay, for markets. Broadly speaking, it makes sense to take a loss, to get out of that Tesla short position, to pay less in taxes, okay? That makes a lot of tactical sense. So I lean positive for next week. I have to be honest with you there. But it's not a certainty that that is going to happen. Now, I understand you may be frustrated. You may have lost money. You may have been betting that Tesla stock was going to continue to go higher every single day. And honestly, I'm kind of shocked. Tactically speaking, at least so far, you have not seen short sellers covering on their short positions. You have not seen the tax loss harvesting that I expected would happen in these short positions. Ultimately, I think that sets us up for a larger rally in 2025. So take it now, take it later. It doesn't matter. Short sellers are taking an ass whooping. That's just is what it is. But I am surprised by this. And it does just make me wonder, could there be something that markets just have not figured out yet? Markets are 80% algorithms, okay? If one algorithm has news or insight to something the rest of us don't, then that is, problematic, right? It's pretty rare, again, I'll circle back to this, where you see the market sell off this aggressively. I mean, the VIX was up like 20% today, and nobody knows exactly why. Again, 10-year Treasury yields or the debt ceiling news that came out after hours, like the Korea situation. Like none of this is really new information. 10-year Treasury yields, I would say, are kind of the most concerning thing. That makes the most sense to me. But it was not like that's new information. They've kind of been at this high level now for days. It just seems like Friday, maybe we reacted to it. I don't know. I would love your thoughts down below in the comment section. Let's take a look at, number one, the short positioning, and number two, the option activity in Tesla stock, because options tell us a lot about future positioning. Options are never positioning backwards looking, right? They're always positioning for the future and what's going to be coming next. Let's start with the short position here in Tesla. You have 2.89% short interest of free float. That's been moving up recently. Again, I I would love to talk to one of these like diehard bears here and just try to understand where they're kind of thinking about things. Because unless you think the Fed is going to have to raise rates next year, or you think we're going into a recession or something along those lines, pretty recessionary economy, it's hard to be bearish on Tesla. Like, those are two things that would be really negative for Tesla, that would drop the stock a lot. You really want to bet against the robotaxi network and cheaper Teslas and semis reaching production, a new Megapack factory that we just got news yesterday that it's pretty much completed. Like, you really want to bet against all of that with deregulation and Trump 2.0 and Trump and Elon being relatively good friends? I don't. Maybe I'm missing something here. Maybe there's a huge piece of the puzzle that I'm overlooking. But assuming I'm not wildly incorrect here, and at least some of this happens, okay, Robotaxi Network is actually a 2025 endeavor, not a 2026 endeavor, I do think ultimately short sellers are going to find themselves in a really, really bad position for most of 2025. Okay, you have 80.59 million shares sold short in Tesla. Guys, this is up from 76 million shares just December 9th. So you're up almost 5 million shares, higher in the total amount sold short since then. That's a lot, okay? Just on Friday, you had return shares, covered shares, of 1.45 million, and shares that were sold short on Friday at 3.22 million. Like, they're doubling down on short positions into the end of this year. So again, maybe we just don't know something. Maybe there's like some kind of big disaster coming. Maybe after all, aliens are coming. Or like these guys are really growing a pair of kahunas on them. Okay? I don't know. I'm just here to point out these things. But to me, it's not adding up. It's not making a whole lot of sense. Even with hedge fund institutional option positioning on Friday, keep in mind, if there is some big bad news that the algorithms reacted to on Friday that caused markets to fall, like, not all big money knows that, right? The algorithms like Citadel and Virtue and I'm sure Vanguard or State Street or BlackRock, some of those guys may know the actual reason for market selling off because they run the algorithms that control most of the trading volume. But your average funds are just as clueless as you are, just as clueless as the rest of us, okay? Now, that's important context. Because when you look at the average fund, the hedge fund or institution that is placing option bets in Tesla, well, it makes these numbers more important. You had 233 different trades on Friday, totaling $193 million. So the dollar amount was really low. That's the first thing I noticed. Thursday, you had $577 million worth of options trades, okay? So this was almost 3 times lower than what you've seen on Thursday, okay? That's a noticeable difference, like way noticeable difference. But the positive order value was 67%. I mean, a flat out just neutral positive order value would be 50%. So you're 17% higher than a neutral. Like, you're pretty bullish. 67% is not like fantastic, but it's definitely not 5% down negative. So with all of this kind of context and information, I think Monday and Tuesday, they're a toss-up, okay? Now, normally when markets sell off like this, for seemingly no reason, it tends to be short-lived. Okay, now it doesn't happen all the time, so I don't have too much data on this for you guys, but I will point out, not too often does the S&P fall more, in fact, almost double what the RSP fell. So technically, there was a larger sell-off in big tech than the rest of the S&P. That is actually a bullish sign if you want to draw any conclusions here. Now, I know small caps did not do as well as the S&P or the NASDAQ. That's understandable, okay? Small caps kind of have their own flaws, right? But when you look at the average stock in the S&P, it was down 0.68% today. The market cap weighted S&P was down 1.05% yesterday. So it was almost a 2x outperformance of the equal weight S&P versus big tech. Perhaps on Friday, you were just overdue for a pullback in your big tech names. I mean, big tech has been leading our markets in December. I mean, the RSP fell 8%, and even following today's sell-off, the S&P was only down like 2.4%, right? It only fell like 4% from its all-time high to its trough low. So maybe we were just due for a sell-off in big tech. Again, it's kind of hard to say with certainty, and that's why Monday and Tuesday could be a toss-up, although I lean more bullish because I think a lot of the tax loss harvesting is likely coming to an end. And why I lean more bullish in Tesla is because if you're going to take that last-minute opportunity to get out of your short position, to use that as a tax loss harvest, Monday and Tuesday are the last days that you can actually do that. Now, as I've talked about in other videos previously, the markets are just so bearish right now. Like, you're forced to be bullish on them. Like, if you're bearish on markets right now, you're late, buddy. Okay? Could markets continue to sell off? Sure. Anything's possible. But like 75% of the selling is likely done. Okay, just judging off the percent of stocks trading above their 50-day moving average. Even during some of the lowest points in 2022, you were in the teens, right? Like 10 to 15% of stocks trading above their 50-day moving average. And the S&P was down almost 30% at this point. Today, you sit with 35% of stocks trading above their 50-day moving average. The last time you were this low, the S&P was in a 10% correction on August 5th. And before that, the S&P was in a 7% drawdown in April of 2024. So you're just so bearish right now that it's likely over as far as the selling. Now, I would not be super shocked, especially as we get into early 2025, if you see big tech sell off, dragging down the index, but you see a broader kind of market rally. Now, again, depending how much big tech sells off, you could see big tech sell off and the rest of the markets do well, but still drag down the index, if that makes sense, because big tech names are 40% of the S&P. If you see 40% of the S&P get destroyed and 60% of the S&P rise a bit, you could see the S&P rise, big tech sell off, and still see the S&P on a headline basis actually sell off. Yeah, it sounds complicated, it sounds confusing, but bullish rest of the markets, bearish on big tech in 2025. That's kind of the summary of this. And for the broad markets perspective, 65% of stocks are currently in an active downtrend. Anytime it's like that, you want to go out and buy something. Now, preferably you want to buy something with a strong, bull narrative, a strong bull thesis for next year as well. You don't want to just buy any old random thing. And I think the AI trade, the AI appliers, is the trade that will do the best in 2025, and Tesla is the leader of that trade, and I don't think that's going away. So I think Monday and Tuesday could be a toss-up, obviously, but this is not the time, unfortunately, to get bearish unless there's a deeper issue here, some sinister situation that we do not know about. Although I'm in the camp that if it has to do with Trump or tariffs, he probably doesn't want to crash the stock market. He doesn't want to be the guy that ended the bull market after Joe Biden did such a good job in keeping the bull market alive. Maybe call it like an ego thing. I don't know, whatever you want to call it, but I don't think he wants the party to end. After all, he rang the New York Stock Exchange opening bell. Okay, maybe that was ultimately a sign of the top after all. Nonetheless, markets are so bearish. it's not time to jump on that bandwagon, even though you could see the indexes fall a bit further from here because of selling in big tech. I don't think that means that Tesla needs to sell off alongside Apple or alongside Microsoft or alongside Nvidia or Google or Meta or Netflix for that matter. I think Tesla has such a strong bull thesis right now that it will continue to do well in 2025. So I'm bullish into year end. 5% sell-off makes me even more bullish. Call me crazy if you want to. That's my perspective. Let me know what you guys think down below in the comment section. Let me know what you think caused the sell-off in markets on Friday anyways. Your opinion's as good as mine. It's as good as the next guy when nobody really knows definitively what happened in the first place. So I'm bullish. I have no clue where Tesla's going to go over the next 2 days. It could be really good. Markets could bounce back something aggressive. Tesla could rally into the 460s, 70s, 80s, closer to 500, or Tesla could do a whole lot of nothing. Just see a little bit of a rally, a little bit of a fall. It's really hard to say with the last 2 days of any given year, but I am bullish. Price level wise, it's tough. Okay. As far as the charts, you want to watch that 20-day moving average at $412 per share. 420 is a pretty solid level, just, round number level. That's a level to be watching as well. And also this downtrending line at about the 490s or so. But we'll talk about this a little bit more over this weekend, what the charts are suggesting for Tesla. But really, long story short, the charts are still as bullish as ever. Nothing changed at all for Tesla unless we break under 415. We've been hitting higher lows since the bottom here, April of 2024, consistently hitting higher lows. That even happened recently. December 20th, December 23rd, you hit 415, you went up again, and now you're back to the 430s. You still haven't broke a lower low. The area in which, again, you'd want to be concerned is if we broke below 415. That would be the area that would say, oh, crap, we have a problem. We're not there yet. So, honestly, I think there's a lot more fear than is probably warranted at this point. But hey, my opinion. Let me know what you guys think down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.